Hello and welcome to Money Today. I'm Zara Said.
And I'm T. Lindsay.
Well, in this episode, we will be giving you the top stock picks of Affin Hwang Asset Management. Its Chief Investment Officer David Ang says that the company's top picks are CIMB and Tenaga National.
Ang says it's time to buy Malaysia. Over the last 6 weeks, we have seen foreign inflows back to Malaysian shores. Take a look at what David Ang has to say.
In terms of large caps, one stock that we've liked has been Tenaga. Right? I think Tenaga gives you that combination of earning certainty, some earnings growth, potentially higher dividends, although that's not coming through yet. Another stock, again large cap, that we think has come down to levels which makes it look attractive is some of the banks, namely CIMB. CIMB, yes, I think there's a lot of the banks still need to run through the issues that all banks are facing, which is rising NPLs, slowing credit growth or loans growth. But CIMB, we like it because it's, I think, priced in. It's trading at 0.8 times price to book. Its subsidiary in Indonesia is recovering very well. That was a weak link in CIMB's stable because of CIMB Niaga's exposure to resources. I think that we've gone beyond the peak of the issues at CIMB Niaga.
Well, interestingly said, Lindsay, Niaga is one of the top 5 banks in Indonesia,
right,
with a customer base of about 3.6 million.
Yep.
Yes, CIMB Niaga's earnings has been a drag on the group, but its second quarter results were quite decent, Lindsay.
Yes, net interest margins were up and so were non-interest margin. And the other thing was its special mention loans. These are loans which are not quite NPLs. They have late repayments but not yet 3 months. Also saw an improvement in their ratios. From about 10%, it's now about 8%. That's pretty good.
Yes, in Maybank Investment Bank research have said that CIMB Niaga has to play a catch-up in the second half of the year.
That's true. And if you were to recall too, there's now this bilateral agreement between Bank Negara and OJK, which is the authority of bank in Indonesia. OJK is actually incentivizing its banks to increase, or rather to incentivizing them to reduce their NIMs. They want to improve the asset quality of the banks.
So this recent move is actually a positive for the banks in Indonesia and Malaysia. And another bank that would benefit from this would definitely be Maybank, because their operations are in Indonesia as well.
Yes, and I think they're upping the standards now because they're all looking to lower the lending rates. Indonesian lending rates are one of the highest. I think it's about 12%, whereas Malaysia, it's half of that, about 6.85%.
Right, and the management has continually stressed that the operating environment this year is actually challenging. But however, Tenaga Research is expecting their results to improve in the second half of this year due to moderate inflation, energy price cuts in April, and also the stronger rupiah.
That's right. Anyway, I think it's a great time to look at CIMB because of its cheap valuations.
On the other hand, Tenaga National, its third quarter results has been solid. It has a potential to move overseas as well.
Well, I know their results, they did really well. I think net profit grew to about 2.3 billion. What is something we can look forward to is their potential agreement with Tenaga. If you recall, Tenaga is going to be constructing and developing that 1,000 megawatt power plant in Pulau Indah. Now, if Tenaga were to participate, they won't be increasing much of their debt. I think it's only about 450 million over the next 3 to 4 years. It hardly stresses out their balance sheet at all.
Right, and then another good thing is definitely the dividends of this company.
Yes.
Right, it is going to be a one-off special dividend which can also help reduce their equity.
You're right, Zunaira, and it's not just one-off because I think at this moment they are looking to optimize their under-leveraged balance sheet. So yes, I think we can expect more dividend payouts moving forward.
Yes, now moving forward to Marketplace, Affin Hwang Chief Investment Officer David Ang says that he does not expect oil prices to go beyond $60 per barrel, but expects it to hover around $40 to $50 a barrel in the next 6 months. Now let's take a listen at what David Ang has to say on the future of the oil prices.
Well, we don't expect oil prices to go above $60. I think oil prices at 40 to 50 is the range that we'll probably see in the medium term. Medium term, I mean the next six months or so.
Well, GST has come in quite handy here. Its revenue had offset the impact of falling oil prices, right?
Yes, that's right. So I think our country has set a target of $30 per barrel And I think that's actually quite good news because this means that Malaysia will achieve its budget deficit level of 3.1%, especially with oil prices being around the $45 level at this moment.
Right now, and Petronas CEO Dato' Wan Zulkifli has recently come out and said that the company is going to stick to $30 per barrel.
I think they should because output levels are at record highs. As I mentioned earlier, OPEC levels are now at 33 million barrels a day. Not just that, non-OPEC countries, Russia, Brazil, everyone's pumping to the max. What about Iran? Sunara, what do you think?
Exactly, because Iran is going to be a big obstacle in this OPEC meeting that is going to come out later next month. They're going to have a deal to freeze production. Iran is saying, no, we are not going to stop production here.
Yes, I don't see that happening. In fact, output for them has been zooming and zooming since they started producing last year.
Exactly, and analysts are skeptical on this because, you know, they are saying that there's no agreement that's going to come out here in this OPEC meeting. They're skeptical. They just feel that it's just going to be an informal meeting. They're just going to discuss, but you know, you will not actually see a freeze in the oil production.
You're right, and one more thing too, we've had technological advances, fracking methods, rig counts have increased. Right now, because of technology, these wells, they can support longer hours, longer lifespans, and I think a lot of oil and gas companies have also gotten used to a lower oil price kind of environment. We've had job cuts, renegotiated contracts, they've trimmed the fat. That's why it's not surprising that the global break-even price for oil prices is now about US $51. That's down almost US $20.
Right, exactly. And it's a wrap-up for Money Today program. Now we'll see you in the next 2 weeks. Stay tuned with Star TV. I'm Zanara Side.
And I'm T. Lindsay.
Take care. Bye-bye.
Bye.